Let's welcome on board Sunil Singhania, founder at Abakkus Asset Management. He joins us in the show right now. Sunil, hi, good morning. Good to have you in the show. And first of all, thank you so much for joining us this week. And all through these 9 years of us being around, since it's our anniversary week. And, you especially have been one of the key contributors in this 9-year journey of ours. So thank you for all your support.
Happy anniversary to you, your team, and all the viewers at ET Now. I'm very privileged to be associated with ET Now for almost all the 9 years, and I look forward to more association as we move forward.
Okay. Right, indeed. Though, Sunil, moving on, would like to understand what your market approach is right now. And what is your style of investing in this current environment where, you're almost stuck in between a rock and a hard place?
So, the first fund, Abakkus Growth Fund, has been launched. I believe that India has come a long way as far as the economy is concerned. We are almost $2.5 trillion in economy size. The next 10-12 years look to be a year where the growth rate should continue between 7 to 8%. In fact, some of the initiatives which we have taken, like GST, should lead to an increase in the revenue pool, and which is already being visible. The first signs of rainfall seems to be on the normal side, and that should aid rural income. So I think all in all, we do look at India reaching a size of maybe $5 trillion over the next 6-7 years, and maybe $8 to $9 trillion in the next 8-9 years. And I think that is the kind of market cap which we should look at. So right now from 2.2, if we are able to reach $7-8 trillion of market cap in the next 8-10 years, that's a decent mid-teen kind of returns which an investors could look at. The other thing is, India is a growing economy. So along with the growing economy, you have new sectors, new companies, which get listed, and new opportunities which get created. So I think I've always been a bottoms-up, stock-specific investor, looking at new trends, looking at new themes, looking at smaller companies which can turn out to be, some sort of alpha creators. And I think this new venture is also going to be a purely equity venture with focus on these kind of alpha plays.
You have been a stock picker in your previous avatar. How are you going about picking stocks now in the last 4 to 5 months when the broader markets have been melting away?
I think, what you're referring to is the last 3-4 months. But if you look at 1 year, you still are making decent profits. So I think we had a phase between August, September of 2017 to January of 2018, where there was a crazy lure and crazy chasing of stocks as far as the segment is concerned, which led to stocks doubling, tripling in 2-3 months. And I think the meltdown which we are seeing right now is to some extent giving away some of these gains. So, if you look at from a point-to-point 2-3 months perspective, you would be some sort of disappointed. But if you look at from a 6-month, 1 year perspective, you're still making very, very good gains in this segment. The other thing is, since the last 20 years, 94, 95 to now, we have seen these phases come so many times. And by nature, these stocks are more volatile. You have bouts of stocks doing very well and bouts of periods where they are definitely facing a rough period. But by and large, smaller companies and the mid-sized companies in India would tend to grow slightly faster than the larger peers. And I think if you are diligent in your stock research, if you are diligent in your balance sheet analysis, then more often than not, over a period of time, you end up creating that alpha. So I think that potential, that possibility, that opportunity continues in any time frame, in any market period. And we believe that even now there are opportunities.
So Sunil, if one were to talk about, say, the next 1 to 2 years, what are the bets, the themes and the stocks that you're betting on?
There are good thing about India is that we are a large country. We are a country which is like more than one country into one. Almost all the states have different opportunities and different philosophies and different way of living. The other thing is that we are a growing country, and therefore you have this entrepreneurship which is very, very thriving. new themes, new sectors keep on coming. So, over the last few years, we have had hospitals which have emerged as a big theme, diagnostics which have emerged as a big theme. You have, companies like Quest and TeamLease, where it is like more staffing which has emerged as new businesses. These businesses did not exist 5 years back. And then, as we move forward, we'll have maybe education companies, we have e-commerce companies, we have more brand companies, retail companies which will come into play. From our side or our perspective, we believe that financial services continues to be a big bet. This move from physical savings to financial savings is a very powerful move. Even in these challenging times as far as markets are concerned, we have seen the flows into mutual funds continue to be quite strong. So I think that side of the opportunity which is benefiting out of move towards financial savings is a great theme. As we move forward, you will have more consumption-oriented themes coming in. I think whether you look at any kind of consumption, any kind of branded plays, any kind of even household, articles and products, there is a huge opportunity which is opening up. So I think that again would be a great theme. The government, all the efforts towards improving infrastructure is gaining ground, and finally we are seeing massive execution across the country. I think next 5-10 years that can possibly be a great theme, and along with ancillary sectors like cement and steel, maybe as a support to the infrastructure side, can be great themes. So good thing, as I said, we are a diversified economy. We are an economy driven by entrepreneurs. We are an economy which are also driven by smaller and mid-sized companies. So our view is that there is a wide range of sectors and themes where there are opportunities.
Okay, the risk of outflows from EMs, when you travel in Asia or talk to fund managers, what are the key risks that they're worried about?
See, as I mentioned earlier, a major factor to watch out for global investors is currencies. And over the last 3-4 months, emerging market currency in particular have been pretty weak vis-a-vis the dollar. I mentioned to you a few countries like Brazil, Turkey, where currencies have taken a big beating. And emerging markets, unfortunately, has now become a basket where for every one country which does well, you have countries which are not doing well. So as we speak, there is this concern about trade wars between the US and China, and therefore the Chinese markets and the Hong Kong markets are taking a beating. So by and large, there is this uncertainty about the prospects of the emerging market basket as a whole. Our view is that you will definitely have these challenges, but these challenges again reverse pretty quickly. At the same time, there is a possibility that investors might, and it's already happening, start to look at more country-specific funds than emerging market funds. But as we speak, I think the currencies need to stabilize before there is a reversal as far as flows into emerging markets is concerned.
Okay. Sunil, as we wind down the discussion, we've got one massive complaint that you should interact more often. And, now that you're coming after a long gap, tell us, where is it that you've been traveling lately in order to market and, raise fund for, or rather raise and meet investors for your fund? What is it that you're gathering and how they are viewing Indian markets currently?
Frankly, apologies for not being on the channel as often. I've been a little bit tied up in my entrepreneurial journey, trying to set up and doing things which I normally am not used to doing. But I think now I'm set, and we have launched the first fund also. But we will interact more often as we move forward. As far as the outside world is concerned, yes, I was in the US for almost a week, a couple of weeks back. And I think there are, sort of conflicting signals and views coming in. On the negative side, specifically on the emerging market currencies, I think US investors are a little bit concerned and challenged. A lot of emerging market currencies have taken a sharp beating. Even rupee has depreciated by 3-4% over the last couple of months. But some of the other countries like Brazil and a few others have seen a massive, rundown on their currencies, and which is and has impacted the view from a global investor's perspective. As far as India is concerned, the view obviously is again mixed. There are concerns about the forthcoming elections, which is next year, and at least the media there is trying to present a scenario where the ruling party is being challenged by a united opposition. There is also concern particularly over rising oil prices, and because that is the single most important factor as far as the currency movement is concerned, and as I mentioned earlier, currency remains a big factor to track for global investors. I think third is obviously the valuations, and to that extent the recent correction, particularly in some high P names and the mid caps, have led to the fact that the premium as far as valuation is concerned is not as high. On the positive side, the overweight which was there in India say a year back has reduced quite significantly. So we don't have investors who are significantly overweight India. At best they are equal weight.
All right, Sunil, we leave it at that. Thanks very much for taking out the time to speak with us this morning, and we really appreciate you being part of our 9th year anniversary celebrations.